Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Monday, February 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So Metals Minute, episode 592. And the wait is over here. The 100-ounce silver futures are now available for trading. And I'll also be on Yahoo Finance around 3 p.m. covering the precious metals markets. So looking at some of the key themes, the breakdown on the precious metals here. Overnight, you do have April gold hitting a low 49.8860. The highs of the overnight session were 50.6870. The last here, as of this recording, is at 50.34. So just off those highs by about $30. Your key level supports can be 46.80. That was your January consolidation highs. And then really your trend supports right around 46.05. The first level resistance about 51.21. And the 10-day average true range is $253.90. Gold volatility is continuing to dip here at 33.96. So back below that 40 mark. Once you get over 40, it really is a lot of panic in the markets here. And the same thing with the silver market. When you start getting that volatility at elevated levels, which it has been, it's been consolidating right around that 95 level. That is a panic mode here in the silver market, with that average true range sitting at about $12.37. So I'm glad that the CME was able to launch that 100-ounce contract here so traders can position size properly here given this elevated level of volatility. So you get the lows overnight on silver at 78.10. The highs of the overnight session here was 81.12. As of this recording, we're sitting right around $80. Now, if you look at the precious metals, the ETF flows here, well, they've cut gold for 5 straight days, and they're also selling silver. So you look at gold, it's fallen about 0.1% here from the previous trading session, and the exchange-traded funds cut about 120,000 troy ounces of gold, the 5th straight day of declines and the longest losing streak since October 29th. You look at total gold held by ETFs, it's up about 0.9% this year. You look at the silver ETF flows, well, they cut 0.3% from the previous trading session, and year to date, those ETF flows have declined about 2%. ETFs cut about 2.22 million troy ounces of silver on Friday, and it was the 3rd straight day of declines. Now, if you look at platinum, the platinum holdings decreased for the 5th straight day as well. So last week's changes here, they reduced gold, platinum, palladium, and they increased silver holdings as far as ETFs. You had one big jump over the course of last week here where we had that breakdown in the precious metals prices, and they really went into silver here as far as loading the boat on the dip. Now you see the gold silver ratio after hitting about a low of 45-1, traveling back up to about 66-1. Overnight, we are seeing a drop down to about 63-1. So we'll get the broader markets here and some of the pictures. One thing you'll want to know is the dollar index continuing to make lows on the session and a strong inverse correlation to the dollar market. Or to the gold market. You look at those broader macro markets, you do have stock futures. They are slipping after coming to that neck-breaking rally here we saw on Friday where the Dow tacked on about 1,200 points here, closing over 50,000. And you got the S&P 500 down 15, the NASDAQ down 100, the Russell down about 7, sitting at 2670. So you do have this volatile setup here where we saw last week, a lot of action, big short cover and rally, and a breakout to the upside here. So you look at the earnings out of the 293 S&P 500 companies that have reported so far, 79% have managed to beat analyst estimates, 16% have missed. As far as economic data, we've got nothing on the docket here today, but you do have the employment report is predicted to show payrolls rose 69,000 in January, which would be the best month in 4 months. And the report will also include an annual revision for the jobs count, which is expected to note a very large markdown here in payrolls growth throughout the year through March of 2025. So they're looking at reanalyzing that number. They're going to take it down quite a bit here because you do have a lot of these payrolls slipping here, and that's where a lot of the weakness in the economy has been in the labor market. Now we'll have Feds Waller, Bostic, and Mirren at speaking events here, and you look at the interest rate cut expectations. Well, there's a high probability for a June cut. You go to the CME's Fed Watch tool here. You look at March, only about a 15.8% likelihood that they'll cut 25 basis points. You go to June, it's closer to 72% that they'll cut. You'll get the dollar index, big lower high on the chart here, and that's part of the reason why you're getting a boost across many different assets. It peaked on February 5th, right around 97.87, so I'll circle that on the charts as that lower high, and that correlation that's inverse to the gold market sits at about 80%. Something you want to look at here is the euro at 118.84 and the Swiss franc at 130.06. That's mirroring the gold market here. WTI crude oil futures at 63.86. 1.83. It is recovering here, but it was under a bit of pressure as you get some of those geopolitical tensions coming down as Iran's president described the nuclear talks as a step forward. Now, you look at 10-year Treasury yields because there was some overnight action that was a little bit of volatility here. You've seen that 4.24%, and Treasuries and a dollar slipped after Chinese regulators said they would call on banks to scale back their holdings of U.S. debt here due to concerns about concentration risk and market volatility. So look at the volatility index here. It peaked at about 22, 23 on Friday and has been slipping since then. And once it dipped below that 20 mark as the opening bell came on Friday, that's when you saw that real acceleration upwards on equity prices. You look at Bitcoin futures, which snapped back about $10,000 off the lows, going from 60 to 70,000, now giving up a bit of gains here, down about 1.8%, sitting at 68,860. And you look at the S&P Gamma exposure, well, it still sits at negative. You go across the pond, you look at Europe and Asia. European stocks, little change. Asian stocks really jumped up here with Japanese stocks rallying to a record high and Korean stocks jumping to more than 3%. So if you like to trade that 100-ounce silver futures contract, you want to open up an account, start trading in these futures markets. They do have 1 ounce, 10 ounce, 33 ounce, 50 ounce, 100 ounce gold contracts. They do have the 100 ounce silver, 1,000 ounce silver, and 5,000 ounce silver contracts. So quite a bit of selection here as far as getting your position sizing and your portfolio correct with a lot of these precious metals. They do have a small copper contract as well, the micro copper, $25 for every penny move on that. And copper futures jumping up to $5.90 here after a big washout on Thursday, snapping back with a bit of a recovery on Friday and some follow through here today. So if you guys got any questions, shoot an email to info@bluelinefutures.com. And remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.